Hey, good afternoon, Alexis. How you doing? Good to see you on today. Good time. I now starting it. Yeah, some feedback going on there. That's all right. Okay, cool. Right, 1, 2. All right, folks. Good afternoon. Let me start into Leah here. Hey, Talia, how you doing? Good to have you on. Hey, Shimish. Okay, so we now going to start starting, so you didn't miss anything. All right. So happy St. Patrick's Day to anybody? Everybody? Okay, so folks, last week Wednesday, we started doing some control accounts, right? So we talked about the debtors or the accounts receivable control account, or sometimes called the sales ledger control account. We did a question, Lara, Brian, more of a kind of example. And we also talked about the creditors control account or the accounts payable control account, also known as the purchases ledger control account. All right, the one example there. And then we had one question to do before we clocked out, which was Jan's company, right? Now, I can't leave the control account revision there because that's barely enough. That's enough to start, right? So what we're going to do, we are going to continue revising some control accounts. So those in the chat, those online and in person, right? The WhatsApp chat will have the PDF with all of the questions. That PDF is fillable, so you can actually type into the accounts if you don't want to write it out or if you don't want to print it out, because there's a lot of paper and ink, so I wouldn't mandate anybody particularly print that out unless you really, really wanted to, all right? Okay, cool. So what we're going to do, ladies and gents, is we're going to take a kind of walk together through this question here, which is Mr. Best. Oh, sorry, which I need to print off for those in class. So 1, 2, 3, 4, 5, 6, 7, 10. Okay, so 10 people. All right. I think I have faith in something. Right. Yeah, okay, cool. That's fine. All right, cool. Yeah. So let's put that to print. What I'll do is I will still write. So this, in case you're wondering, this is from the Jan 2011, right? So it was some time ago, but they did bring control accounts relatively recently, within this decade, I should say. I actually started in 2025 solutions today, Jan 2025. Going kind of weird into some like how they're asking and bringing some of the questions. Not hard per se, just different, I guess, maybe the best description. Just adjust. Oh, here's Aisha. Right. Hey, good afternoon, Aisha. How you doing? Good to have you on. We now going to start taking a look at this question, so you have good time. I'm just going to adjust a little bit on the right. Yeah, I'll leave all that. I think we see everything I see in yours. Okay, cool. Not bad. All right, so this is Jan 2011, right? So of course you all should have your stuff from last. I know you weren't here last week, so I'll print out some extra stuff for you, right? Huh? Need one hour. Body formats. What we're going to do, is through this stuff here, kind of like a walkthrough example. Yours, okay. Rest up, maybe for accounts and enjoy back on you could do that too. All right. Okay. Right. right, so again, folks, let's take a little read of the question, and what we're going to do, we'll go through one thing at a time, right? So again, control accounts, basically what they do is they summarize the entire ledger. So for example, for all of you all in the PoA class here and online, and for everybody in maths and ad maths and normal Form 4 classes, everybody has a literal T account, right? And let me see, boy. Oh, I'll tell you. So I have 28 of you all on this roll, 20 on the maths, so that's 48. I only have 4 people on maths, so that's 52. 8 people, I have about 20 there, so we have 72 people now. Here we have about 4 people, so that's 76. Maths classes, and then on top of that, it's not just my classes, it's also Kayla classes that I keep track of, Mr. Cooper classes, and you have individual, 2 Cape classes, and then one-on-ones. So I have real plenty of accounts to keep track of. Now, I don't have time to keep track of all of that. So what I do is I do something called a control account. So instead of going and entering information in everybody's account, although I do have a master spread that I use to update, and because I'm a little Excel, small Excel trading, I was able to do it in such a way that I can enter information in one place and updates in multiple places, right? Excel is a wonderful thing if you like logic and maths and design. Oh, let me just tell Aliana Gadasa. Hey, Aliana Gadasa, good to have you on. All right, we're now going to go through an example here so you didn't miss anything. All right, it's still control accounts from last week. Right, so what I was saying is sometimes I do have to go through and figure out why someone has let's say, a balance on the account that doesn't make sense. It might seem, like, first of all, they had a balance, and if it's a different figure than normal, right? So the only kind of inconvenience there is that I have to open up like about 5, 6, 7, 8 spreadsheets and go through all and pull out the next one. So I clearly have some design issues of my own. Anyhow, but long story short, instead of having to go through all those accounts to figure out how much money I made, how much money I received, I could go straight to other places and pull that out, right? It have a revenue schedule. It have, well, for you all, it might have a general journal. You'll have your sales journal, all that kind of stuff. So what control accounts do is they pull summary information from the books of original entry, such as the sales journal, general journal, returns in, the cash book, etc. And what we do then is put it in one account. You still discussing, so you didn't miss anything. Right, sorry. Let me just put marker present. Right, yeah, so we put all that information in one account, right? And we balance it off so we know how much money is owed to us at the end of the period, right? So for the sales ledger control account or the debtors control account, right? That's the control account that we have with people to whom we sell goods on credit, right? And when they sell somebody goods on credit, what does that mean? You give them the goods, but did they give you money? No, so they owe you money, right? So would it be a good thing to know how much money is owed to you in total and how much you receive in total and that kind of stuff? Right. So that's basically what the control account allows us to do. It allows us to present the information regarding our debtors in one convenient bite-sized place, right? Now, of course, to do that, you have to read through the information. And a lot of times that's where people have a little issue, rereading, right? Now, whether it is you might have a reading issue, whether it's dyslexia or whatever the case is, or, I mean, I was going through TikTok this weekend, and a lot of stuff that popped up on my For You page had to do with teachers complaining about attention spans and kids being basically shot to pieces because of TikTok and Instagram and stuff, right? And the truth is, sometimes it's something to me too. Sometimes I, on TikTok scrolling, and I watch something, I would normally watch all the way through, like a particular solo from a guitar song or stand-up comedy, and 10 seconds and I ready to scroll again, and I'm like, why am I doing this? I want to watch this, but at least I don't want to. So we really had to be careful with that social media thing. It has its good aspects, and it's, well, what's the word looking for, boy? That's a particular word. Anyhow, and that's the next thing, is actually affecting memory too, right? As fighting for like health, remember, boy. Surreptitious. Yeah. You all know that word, by the way? With me? All right. So basically, it has these negative side effects that you don't necessarily see right away. It takes time to build up. Like if somebody ate like very badly over their life, right? You do it KFC once and get a heart attack, right? If that happens, then something real wrong, right? Over years, if you keep eating poorly, you develop these things called lifestyle diseases, like atherosclerosis, blockage of arteries, diabetes, etc., right? So we anyhow, I kind of get way off topic, but long story short, it's good to have these control accounts so you can have these things in one place, right? Now, what we're going to do is we're going to go through and we're going to pick out specifically the items that have to do with our debtors, right? So at the top, it says, Mr. Best prepared the following information in order to produce end-of-year figures for his final accounts. Final accounts have to do specifically with your income statement and your balance sheet. All right. So he's produced this information. So we have sales ledger balances. Now what I'm going to do is I'm going to push that to the top. I'm going to push this here. This is best. All right, cool. Let me get a, what you call it? Oh, right. Best. So best is, Jan 2011, Mr. Best, right? We're going to take out this information because, of course, it's not the same information. Hold on. Right. Put a couple more. And down here, same thing. It's looking like I have stuff left there. You'll see those little dashes there? That is weird. Okay. All right, cool. So you can call it debtors control. Now this is one of the older ones, right? So it says sales ledger control account, right? So let's use that. So sales ledger control account, right? So I would strongly suggest you use the same words that the question gives you. But if you do, for example, this is called sales ledger control account here. But if you put debtors control account or accounts receivable control account, it's perfectly fine. They all mean the same thing. It's different names for the same item, right? Okay, right. So let's have a little recap here. Your debtors, right? How do we classify a debtor or an account receivable? As an asset. What are your double entry rules for assets? Debitor, increase, creditor, decrease, right? And on top of that, what type of balance does an asset normally have at start? A debit. Very good. Let's zoom in. Right. So at the start, sales ledger balances at start, right? So debit is 25,260. So on the debit side, you're going to put balance brought down 25,260, right? If you prefer to put balance at start, that's perfectly fine as well, right? Balance at start, right? 1/1/10. Right now, of course, you're supposed to have a date column. I just don't like them because you end up using them once or twice for the whole thing. It's a waste of space in my opinion, right? Unless it was like the cash book where you have a date for every particular transaction, then cool, no problem, right? Anyhow. Right. Now, you'll also notice you have a credit balance at start. Now, a credit balance implies a liability. How do we have a liability existing in an asset account? Well, again, your debtors owe you money. The money owed to you is the asset, not the person, right? So sometimes what can happen is somebody, let's say somebody owed you, they tell them 150 and they pay you 160 because they hear incorrectly. So what happened was they overpaid you. So you have money for them, right? So in certain cases like that, we could end up with a credit balance in the debtors account or in the debtors control account, right? So what happened is there is the existence of a liability, a minor liability in the larger asset account. So if they give you that information, then you put it in, right? So balance at start, right? And again, I'm only putting the dates here because I didn't put a date column. You don't have to put them there, right? Now, we're ignoring anything that does not have to do with the sales ledger control account, with our debtors. So when it says, say, purchases ledger balances, we're ignoring that for now. Now, next. So when you sell to your customers on credit, you give them the goods and they give you a promise that they'll pay you in the future. So they owe you money, right? Which is the asset. So that is how we have the debit balance, right? Now, when people owe you money, what do you hope will happen with respect to the money? You hope they pay you back. Now, when they pay you back, let's say you sold somebody $100 worth of goods on credit and they paid you $80. How much money do they have left for you now? 20. So what happened to the amount of money they owed you? It went down. So the asset decreased. The asset of the receivable decreased. And to record a decrease in an asset, you go on the credit side of the account. So the receipts from customers is the money your customers pay you. So receipt refers to money you receive. Receipts, receive, right? Now in your cash book, which we're not showing here, your cash book will have to go up. So you have to debit the cash book. And this is the corresponding credit to that, all right? So it says how much? 392,690, right? So you could put total receipts from customers, you could put cash book, etc. Right? So total receipts from customers. All right, give me 1 second. Let me open up these columns a little bit more. All right, so things don't get too squanched. Okay, so again, payments to suppliers, we're ignoring that. Purchases on credit, we're ignoring that. Sales on credit, right? So that is the primary interaction with your debtors. That is the reason we have debtors in the first place. Sales on credit or credit sales. By the way, what journal would we go to find out total credit sales? Here's sales journal, all right? So sales on credit is 412,500. Let me see, do I have that thing here? Yeah, right, okay, cool. So that would help, right? So again, when you sell to your customers on credit, they don't pay you. They promise to pay you, which gives rise to the receivable, which is an asset. And in this case, because you're making the credit sale, your asset is increasing. And to record an increase in an asset, we go on the debit side. So 412,500, right? So you could put sales on credit, you could put credit sales, you could put sales journal. So whatever you want to put, right? So sales, so credit sales, sales journal, right? You don't have to put both of those things. It's just to show you, hey, it's not only one correct thing you could write there. What year paper is this? Jan 2011. January 2011. Hold on, let me check. All right. Sandia, that's at par. Any dividend calculations are only at par. Okay, right. Now, which of these discounts is relevant to the debtors control? If we receive discount, that implies that we're getting it, and you only get discount when you're making a payment. Do we pay our debtors? No, they're supposed to pay us. So in that case, if we are getting the money, we could allow the discount. So the relevant one is the what you call it? The discount allowed. Now, here's the question. What effect does allowing discount have on the amount of money that you could expect to receive? It decreases it, right? If somebody owed you 105 and they say, don't worry about the 5, give me 100, right? Just wrong it off. What you've done is you have decreased the amount of money you were expecting to receive, right? And to decrease an asset, you have to go on the credit side. We go in here, right? Discount allowed. All right, so discount received would have to go in the purchases ledger control account. Right, now we have returns in and returns out. So returns in would come from the customers or the debtors, right? And if they send you back goods before they pay for them, do they still have to pay for them? No, so it will reduce the amount of money that they're supposed to send your way. So again, this would go on the credit side. 100, right? Right, so if they paid already, what would have happened is you would have debited cash book and credited here, right? Now, if there was a return, right? So yes, you'd have to debit returns inwards. That's the account that is debited when there's a return, right? The credit would either be, if you pay them back one time, you'd credit your cash book, cash or bank. If it didn't credit immediately, you'd have to credit refund payable, right? Because if somebody pays for something already and then they send it back, you have money for them. And unless you pay them, you still owe them the money. And anytime you owe anybody money, that's classified as a liability, which would require a credit to be instanced. J.K. Cougar, how are you doing? Hi to you too. Let me just see if Sandy, were you there? Okay. Hello to 5 people on YouTube. Anyhow, right. Right, bad debts written off. So sometimes, as we know, in business, there's a phenomenon called bad debts, right? It is the situation where somebody owed you money and either can't or won't pay you back. In which case, you can no longer reasonably expect to receive the money in the foreseeable future or in the near future, right? So it no longer meets the definition of an asset. So you have to reclassify it. What does that mean? It means right now, there's a balance inside of here that's 2,800. But we know we have to write off that. So it can no longer stay on the debit side. So you have to remove it. And how do we remove a debit? You go on the credit side, right? Because when you write off the debt, what happens to the total amount of money coming your way? It goes down, all right? So bad debts written off. Now we have balance in the sales ledger set off against balances in the purchases ledger. All right, anybody remember what a set off is from last week? All right, so I like to say it's the cancellation of common debt. Well, let me explain, right? So let me say Noah borrowed $10 from me. So right now, Noah owes me 10. Let's say we kind of forget about it, and then I borrow 12 from Noah, right? So do we have to pay each other back the full amount, or can there be a simpler fix for that? I can just give him back $2, right? So if he borrowed 10 from me and I borrowed 12, so technically speaking, I also borrowed 10 from him plus an extra 2. So if we both owe each other $10, do we have to pay each other back anything? No, right? You could simply call it even, right? So that's what set off is. If I owe you $10 and you owe me $10, we could call it square, right? That's what set off is. Now, what it does is it reduces the amount on both sides. So this figure here, this 500 for set off, right? It literally says that balance in the sales ledger set off against balances in the purchases ledger. So this appears in both control accounts. And it appears on the side that causes the decrease, right? So in the debtors control, this is an asset. To record a decrease in an asset, you have to credit. So you'll go on this side, and you'll put your 500, and you'll put set off. All right. Now, if we had the, well, we will be doing the creditors control. It'll go on the credits, the debit side there, right? Set off. Okay, now we have some final information here. So sales ledger balance at the end of December 2010. So we don't know what the debit balance is, but we have a closing credit balance. Right, so this is where it's get a little sticky. Now, to have a closing debit balance brought down, it has to first be carried down from the opposite side. Balance at end, right? Or balance carried down. We don't know what it is. Right? Because this balance, even though it is on the credit side, is brought down on the debit side. And that's what we call the balance in the account. On what side the balance is brought down. Right? But we do have a credit balance at end as well. So we could put balance at end, or carried down is 360. Oops, that's not a 3. Right. And there's nothing else below here. Right? So what I'm going to do, let's open this up a little bit more now. We could have a slightly easier time, right? Oops. Oh, do that way. All right. So now to balance off the accounts, we have to simply add up both sides and literally find the difference. Right. Right. So right away here, we could see the debit side total is 438,000 and change. And this side is only 401,000. So clearly, there's a balance going to be carried on from here. How do we find it? We take, correct, simply the difference between both sides. You take your debit side total and you minus your credit side total. Right now, of course, that happens in your calculator. That balance ends up being 36,270. Put that in a blue. Now, what you guys doing? Right. So you're going to bring your balance. So balance brought down 36,270. And don't forget the other one, balance brought down 60. Right. So that is what your sales ledger control account, or your debtors control account, or your accounts receivable control account looks like for Mr. Best. Right now, there were a couple other items that the question didn't put. The water bottle. Right. All right, sorry, just give me 1 sec. I forgot I wanted to do something real quick. Maybe food for somebody. Wallet upstairs, sorry. Right, cool. Okay, Google Meet. If you guys are good with the control account on your screen, just kind of give me a quick G in the chat. Please and thanks. If you need me to re-explain any particular aspect so far, that's not a problem. Give me an R. Right, so I have 4, 5, 6, about 10 people. Nice. 4. 3 or 4, let me know. Right. All right. In class, people, are we okay with the debtors control on the screen currently? Any questions? Anybody? Anything? No? Okay, cool. All right. So now we want to do the complement to this, which is the creditors control. All right. So let's go back to the question. All right. So again, we'll put it to the top. We'll put this below here. We'll zoom out it about. Take a look. Yeah, on top here, we'll go back 200. Yeah, man. That one could work. All right, cool. All right. So let's identify the items with which we're working. Right. So the open. So again, with the purchases ledger control account, the creditors control account, right? That's not gonna. 1 second. Yeah, it does that sometimes. Right. Purchases ledger control. So again, the debtors control was basically summarizing an asset. The purchases or creditors control is summarizing a liability. So your double entry rules are now reversed. Right? So the credit balance, well, I mean, the credit balance is always on the credit side. Let's start as 32,130. And you also have a debit balance. Now, how could a liability have a debit balance when the debit balance applies an asset? That's because just like how you could have a refund for a debtor, a creditor could have a refund for you. You may have overpaid. You may have maybe you were supposed to get a discount that they didn't actually apply, and they have money for you. Whatever the case is, right? So you can have a balance. Start here as well. Right, and that's 350. Right, now, as the name implies, purchases ledger control account means that these are individuals or companies with whom you interact mainly because you are purchasing goods from them primarily on credit. When you buy on credit, do you pay for it immediately? No, you don't. You promise to pay for it in the future. And anytime you owe money for anything, that's a liability. So any present obligation that you have to transfer benefits in the future arising out of a past transaction is a liability, right? And you can see the 3 elements of time, past, present, and future existing, right? Okay, so now let's go through and see. So the receipts from customers are your debtors, right? Total payments to suppliers, right? That's your payment. So when you buy on credit, you are also expected to pay them back to repay your creditors, right? Now, when you pay back the people you owe money to, you reduce your liability. And to record a reduction or a decrease in a liability, you have to go on the debit side of the liability account, right? And that's so you can put again total payments to suppliers. You put cash book, cash/bank, right? Right. And here we have the primary interaction with our, well, creditors, the credit purchases. So of course, that is what basically, I hope I'm applying this correctly, instantiated the liability in the first place. So we have to put that on the credit side of the purchases ledger control account. Right. So this is credit. And just as revision, in what journal would we find the total for credit purchases? The purchases journal. Sales on credit discount. Right. So we said discount allowed is what we allow to people who pay us, people from whom we receive money. And the discount received, that's when we are paying somebody. So that, of course, would also decrease the liability. It's like you owe somebody like 147, and they say, just give me 125 or something, right? Or 120. Right? They've knocked off you. So you've received the discount, but it decreases the liability, which is recorded on the debit side of the liability account. Right? Returns out, so you could also send back goods to your suppliers, which would also reduce the liability. Gosh, how you do? Right. No balance written off. Right. So again, the same 500 goes in both accounts on opposite sides. Right. So set off. And we also have some closing. Well, we have to find the closing credit balance. So again, the closing credit balance will, yes, be brought down on the credit side. But prior to being brought down on the credit side, it has to be carried down on the opposite side. So balance at end or carry down. Right? We don't know what that is, right? It's going to be brought down here. Right. And then the closing debit balance is 230. So that's going to be brought down on this side here. But of course, before you can be brought down on the debit side, you have to be carried on the credit side. 230. Okay, so now, right, so as you can see, this side, debit side is 315, 170. The credit side is 353. That's about 38,000 and change, right? So to find the balance, you find the difference between the two totals, right? You take your credit side total and you minus your debit side total. Yeah, see, 38,000 and change. Right, so balance brought down on the credit side is 38,290. So that is the purchases ledger control account. But most of the items you'd find in it, there are some that are not there. We'll talk about that in a little bit. Right. Okay. All right. So, ladies and gents on Google Meet, if you guys are good with the purchases ledger control account as shown in the screen, kind of give me a G in the chat. If you need me to re-explain, that's not a problem. Give me an R. Please and thanks. All the A's, boy. Almost an order too. 7. All right. Cool. All right. And in class, people, are we okay with what's on the screen there? Any questions? Anybody? Anything? One second. Yeah. All right. Let's see if this printer will cooperate. All right, okay, so I got almost everybody in the Google Meet to give me a response. Connect. Where can connect? Okay, cool. As right, so we did that with invest. The Jans. All right, so the next question we'll work is actually from May, June 2015. There's actually one item in it that I kind of warn you about. Actually, tell it to probably leave out. Put it already. Crash course registration. It's ongoing. The people have been registering since January. I don't have like a whole set. When I started promoting it, it might get correct. So what you could do is you could email me. And we could get you registered. That's not a problem. So you block off one item there. The last item, so you could block that off. All right, so folks, this is the May, June 2015, as I mentioned just now. So it says the accounting department of Cav Crafts provided the following information from its various books. So I'm giving you all this to do because it's very similar to Jan's, right? And Jan's was Jan 2020, right? As you can see, the layout is very, very similar. All right, so we have credit purchases, credit sales, and then we have accounts receivable and accounts payable balances. So September 2013 are the opening balances, August 2014 is the closing balances. Cash received from accounts receivable, cash paid to accounts payable, discounts allowed, discounts received, sales returns, purchases returned, and refunds for overpayments from accounts payable. Now, we didn't see this before, right? So I'll tell you one time, this will go on the credit side of the creditors control. Anyhow, you could always ask, on the exam control. Right. So what I'd like you all to do for me, please, is I want you all to start with the debtors control. Right, but we just want to do both of them, right? So I'll give you 7 to 10 minutes to do up the debtors control. We could correct it then. If you need more time, it's not a problem. Let me know. Right, and of course, if you have any questions, please feel free to let me know. let me pick as well. The reason I'm blanking out that item here, which is the interest on late payments received, is because um, I know where it goes. But if you put it there, then the account ends up being out of balance by that same amount. And then somebody told me we were supposed to put a next peg on the next side. I'm like, well, how are we supposed to know that? And it was a whole thing. But more likely than not, I'm just being very nitpicky, but just for the sake of avoiding that particular headache. Right. So, right, yes, check it. So September 13th. So these are the opening balances here, and these are the closing balances. Yeah. What will I be doing for the PoA crash course? So I'm gonna take a select few topics. So the plan is, like last year I did, I think it was 16 2-hour sessions, and basically I covered 8 topics. So basically 4 hours a topic. So I did income statements, balance sheets, bank recs, errors, partnerships, companies, ratios. I think I stuck in cooperatives somewhere. Obviously, you can't cover every single thing. I mean, you could. I just the depth I want to go to. So I'm gonna see if I can do that again. Because I know other places do like a full 12 hours or full like 18 months, 18 nights. I'm not doing that. I have other things to do. Lots of other things to do. And apparently, I have a maths crash course too. I was asked to do one, so I'm like, okay. And I'm have to consider a Cape accounting unit 2 crash course. So all these different things crashing at the same time. So yeah, but long story short, that's basically what I'm tackling. The oh right, if not the cooperative, so the cooperative is gonna be like a 2 hours, and then the last 2 hours with like the budgeting slash cash projections slash absorption costing. So yeah, that's basically it. Um, Let's have the crash course. Last it was 400. I could do 400 again. No, last it was 8. Yeah, I did. YouTube. Anybody else? No? Okay. Control account. Actually, I'm doing this topic in there as well. Come on. Yeah. Yeah, that sounds good. Yeah. Okay. Uh, you can buy it. I'll have a piece. But we still have the same long one here by home to use. Yeah. I mean, yeah, yeah, agreed. Yeah, I believe so. Okay, cool. Yeah. So, yeah. The last like checking home, my wife, and making sure everything okay with the babies and them. Uh-huh. Credit side. On the debit side after, yeah. Right. Right. So the opening balance is brought down there, right? And then the closing balance is brought down there after you close off. So the 7,800 will actually be on the credit side initially before your total. Right. So maybe if you all have any questions, someone's going to ask, yeah. No? So if I come and take a look and see what you're doing here. The whole account finish? No? Finishing? Alright. We take a look and see what's going on. Oh. Yeah. This one, this particular question, you just kind of have to plug and play. As in, you plug in the stuff on the correct side and you total up, right? You didn't actually have to find a balance. You kind of gave it to you outright. So, right, that's fine. Right. So I'm just gonna push us to the top there, and I'm gonna start populating here. Why didn't Cav Crafts 2050? Right. Okay. Cool. Take out this stuff here. Cool. So the opening balance was 5,010. Closing, but we'll come back to that, right? Credit sales. That was on this side. Cash received from accounts receivable, right? So cash received. Discounts allowed. Right. Sales returns. Mm-hmm. Yeah. Discounts received, sales returns. Right. And then the closing balance here was 7,800, right? So balance carried on. Boom. So you see both sides end up being the same one time. So we didn't need to calculate the balance then, like in the previous question. So it was kind of like an easy one. Trading wheels. Right. So that is the debtors control account for this question. Send a picture of the question itself. What this is? Yeah, so that's Cav Crafts. Okay, cool. So we're gonna maximize here. We're gonna clear out this one too. Okay, so that's the debtors control. All right, so Google Meet, if you guys are good with that, just kind of give me a quick Genie chat, please and thanks. If you have any questions, now is a good time to ask. All right, if you're good, cool. If not, let me know. Right, I will be here to help. Boy. 1, 2, 3, 4, 5, 6, 7, 8. Okay, all right, no problems. Cool. All right. So with that done, I'll put back up the information and I'll give you a few minutes again to sort out the. Oh no, 200. 200 was good. Okay, so we kind of had a good email. 75. Yeah. A big head block in that figure. So clearly I had a. You know. One second. I'm sorry. Okay, cool. Right. So I think that's perfectly visible there. And my head not blocking anything. Right. Crash, more info on the crash course, right? I'm still working on the details because the way that Carnival and the Easter break fell this year, um, basically what's going to happen is it's going to be to the end of that Easter break, right up until the exam. We're probably going to do 2 to 4 hours a day, like a 10 to 12 and a 1 to 3. But I have to confirm that, right? It will like last year it was 16 2 hour sessions. I'm aiming for the same thing again. Right? So basically, if we could do like 8 straight days, like 4 hours each, a topic a day, so we can nail on about 8 topics. Anything else I could just give you all, well, for free. Cost will probably be about 400. I think I did that last year. Or was it 8? I think it was 8 last year. I'll do where you could pay by per day or you could pay per session or pay for the whole thing. Yeah. But what you can do, Ash, you can either email me or message me on Instagram or whatever. I'll put you on the list. So when you email me, say this is Ash from TikTok. I do see my DMs on TikTok very often. They don't like I do have notifications, but I don't know why. Instagram, for sure you'll be able to see it. Although I had issues with my Meta apps recently, and I This didn't come true. No, sorry. Because correct. So it has been the opposite side of when you're getting one. Hmm. Yeah. Yeah. Remember, it's a liability. And liabilities have credit balances at start. Okay. All right. Let's start going here. All right, cool. There. There. Okay. So with the creditors control, we are now recording like a kind of summary liability. So your credits are your increases, your debits are your decreases, right? So you could start with your balance if you want, right? So the opening balance in the accounts payable is 3,950. So balance brought down 3,950. Your credit purchases, major transaction you have with your creditors, 196,700. is cash paid to accounts payable, right? So cash paid to 194,400. Discounts received. Okay. Purchases returns. 40. Refunds, right? That'll go here. And then your closing balance was 2830, right? And the balance is one time. 202,530. Yo. 1 second, my wife calling me. Hello? Oh, okay. All right. Okay, sorry. Okay, Google Meet. If you guys are good with that, just kind of give me a quick Genie chat. If you need me to re-explain, clarify, then give me an R. Okay, cool. Okay, lovely. All right. In class, people, are we okay with the creditors control as seen on the screen there? Any questions? Anybody? Anything? Sure. Okay. All right. One second. Ow. Ow. Okay. Just for full disclosure, let me just talk to you about the item I kind of blanked out here. Right. So that was this item here, which was interest on late payments received from account receivable. Right. Now, in our format, right, the interest goes here, which is when we charge interest for late payments. Right. Now, the charging of the interest and the receiving of the interest is not the same thing. Right. So I could, like, for example, when I send your parents the invoice or the reminder for month end, that's me charging, right? And then when I receive fees, that's your parents paying off the fees, right? So this thing here, I just said interest on late payments, and the placement of this word is what kind of threw me. So interest on late payments received from accounts receivable. So here's my question. Is it the interest that was received, or was it the payments that were received late? So most people say, well, it's the interest. Right? Is the interest that was received late. Sorry, the received here applies to the interest as opposed to the late payments, the payments being received late, and we're charging interest on that. Right? So that was the quandaries. Now, if it is that, for example, if it is that is the interest being received, then that will go on this side across here, right? It will go with the cash receipts. You can make a separate line for it, right? But if we do that, let me show what happens, right? If we do that and we put the interest received 660, what happens? What happens is that this doesn't balance, So the question becomes, okay, well, to make it balanced, we have to put 660 on this side. But what is this 660? And then they would just say, well, that's just when you charge the interest. I'm like, well, how do you know you're charging interest this month? And I say, well, that's how, if they don't do that, it wouldn't balance. I'm like, so, but then the other thing I was saying is that, yeah, I would have put the 660 here because to me, that's the interest on the payments that we receive late, as opposed to the receipt of the interest. So to me, what this is the 660 here, not this. But if we put the 660 here, it'll be up by 660 on this side. So I just leave all that item there because I find that piece of the question was poorly constructed. I don't agree with it, so I don't include it when I do the question. Anyhow, right, okay. So from there now, right, so we have about half an hour left, a little more half an hour. So we have 40 minutes, right, good. So next question I want to do, hold on, do I want to do this one, boy? Nah. Way back, boy. Nah, not so far back. Right, so this is the monster question. When I say monster, it just have plenty, right? It have no tricks or anything in it, to be honest, right? It's just plenty, right? The only other one I would actually have wanted to do would be JT Enterprises, right? So I think JT would be a nice one to do. Again, JT is quite comprehensive, right? But it's just to fit everything on the screen. That's the only little challenge I have here. That's basically it there. All right, so JT, by the way, is the May 2014 question, right? And you have to do both the accounts payable control account and the receivable control account. Doesn't matter which one you do first. You actually get more marks for the receivables because there's more items that could possibly go in it, right? So let's just take a quick read. As we read, I'll print it out for those in class as well. Oh, hold on. All right. Don't listen to this. Accounts will ruin you. I get in gray hair at 20. People like I had a very bad experience with accounts. It's not that bad. It just had to have a good teacher and the correct mindset. I think a lot of us go into learning things with the wrong mindset. We also have teachers who are not very flexible in their approaches, which is unfortunate. Tell me about it, ACCA level 3. Yeah, well, you doing stuff where it have teachers there. No, I never did it, right? I've always heard people complain. But the truth is, there is a logic to it. And people trying to impart that knowledge don't always measure the learning styles. You know, so that's anyhow, let me get back to my question here, but you and I could talk. It would be interesting. Right, so JT Enterprises, whose purchases, no, yeah, correct, yeah, finishing level, which is pretty good for 20 years old. I walked out of my last UV exam, still 20 years old. Anyhow, so whose purchases and sales are all on credit, prepares control accounts at the end of every month. Right, so at the end of April 2014, JT Enterprises provided the following information on both its payables and its receivables, right? I guess I'll do 150. Right, so yeah. So you have your accounts payable at the top here. You have opening debit and credit balances, purchases returns, payments to surplus, receive prepayment by check. This is just to throw people off. There's still a payment. Late payment charge, and then a closing debit balance. So what they're missing on top of here is they're missing the closing credit balance. But you also have set off down here. And how they caught people was that they gave them 2 figures. And here now, even up to this day, I did this solution on my YouTube channel back in 2019. Up to this day, people ask, well, sir, how come you put this figure, how come you left out the 1050? It says purchase it, right? So remember, and I even put little annotations here, right? So a firm, escrow, is a supplier and a customer. So we buy from them and sell to them, right? Escrow Limited's balances are as follows. So right now we owe them 1050 and they owe us 375, right? So just like I was saying, right? If Noah owes me $10 and I owe him 12, we're going to cancel the 10, the lower amount. So you're not finding the difference. You're just canceling the lower amount. And the lower amount here is 375. So this 375 is the setup. So that was the trick in this question, right? And it said the firm sets off the appropriate amount. So they didn't tell you, right? This is CSEC. Yeah, they didn't tell you which figure was the correct one. So people do all kind of gymnastics. They use the 1050 in the purchases ledger control account and the 375 in the debtors control account. They found the difference. Some of them just use 1050. They did everything except the right thing, right? So I'll tell you outright, right? If they give you the two figures, it's the lower one. But read the question carefully, right? Okay. So yeah, so this question should take you the rest of the time, right? I'm gonna give you. Okay, even if not sure what goes where, everything, put down what you know. You get marks on what you know. You listen first about how many marks you can get. If you don't know everything, that's okay. That's why we get practice it. Right? Yeah. Right? The revision and part of what happens in revision is what counts in. Let me see if it works this time. That's all of it. What I can invite you to do is to move anywhere on this side. Yeah, so we are just about 529, right? So in about, all right, so if we're doing the creditors control account first, I'll give it 10 to 12 minutes. Right. Right, V, right. So V, you said obviously, but some people, to some people, not so obvious. But I'm glad you know your stuff. Right? Ah. Sales for the month of April, yeah. Now, what they used to do back in the day, and when I say back in like early 2000s, late 90s, is they'll put sales, but as we know, you have two types of sales, right? Cash and credit. And then they would have given you a way to figure out, well, which one was cash and which was credit. But since then, I have seen that for a long time. Yeah. Same thing. Same thing. Positive. I have already recorded all of my solutions I just have to edit them and post them. What I think I will be doing, however, is I might put the PDFs on the website. I'm actually in the process of doing Jan 2025. I got the first three questions this afternoon, about an hour or so. More than an hour. I'll try and finish it off tonight. Edit it and put those things out. Because I want them out so people could use them. I was considering just doing like a live for each of the questions. I kind of like my regular style of editing videos. But yeah, time proven to be a bit of a serious constraint with that. Oh, well, Ashley Sombo. I got an email from her, and her email address says agency Okay. Yeah, about a minute and a half again to finish off the creditors control, and I'll start it. Mm. Late payment charge. Okay, so if we pay late, right, they'll charge us extra, like a penalty. So yeah, it'll increase the amount. That's correct. Oh, both of them. That's the amount they set off in both accounts. Right, so the set off does what? It reduces or cancels debts. So it'll cancel the liability, which is right. So let me start doing this one. This is GT. A couple more lines there. Right, so in GT, let me actually figure this is 2014 into what is this? Let's clear out that one too. Right, so we have a couple of opening balances there. Right, so balance brought down. That's the 310 on that side. Balance brought down. 100. Right, purchases for the month of April. 720. Purchases returns. I did 620. Payments to suppliers. 970. Discounts received. Right, that's 1200. Now this one prepayment by check is still a payment to suppliers. That still goes on the debit side. Late payment charge, right? So if they charge you like a penalty being late, it means you have to pay them more money now. So that'll increase the liability. Right. And yeah. Right. And don't forget the set off. 375. The closing debit balance of 270. Right. And now we're just missing the closing credit balance. Okay, let's maximize this so you can see everything a bit more clearly. Right. So prior to that, okay, cool. So we were right. Okay, cool. So we have 69 on this side, 65, which is about a little less than 4,000. Right, so 69 minus the sum of, right, 3210, right? So balance brought down, this on that side, and then balance brought down, D5. Right. So that's the creditors control. Okay, in class, people, are we okay with that particular item? Does thou have any questions, problems, queries, concerns? Because that's when it's being carried down from here and brought down here. So when they say a closing debit balance, it's on the brought down side. The brought down is what they're talking about. But to be brought down on one side, you have to be carried off on the opposite side. Google Meet, if you guys are good with that, kind of give me a G in the chat. If you need me to re-explain, give me an R. Cool. PPQ vibes. Okay, cool. Right, so what I'll do, let me maximize this now. So yeah, I'll give you guys about 10 to 12 minutes to do the debtors control. Right, and don't forget the set off goes in both accounts. It's the same figure, but on opposite sides. Page. Ashley said you gave her my number. Yeah. Okay, cool, cool. Thank you. Okay. Sorry. Okay. Very interesting. Cool. So let me organize business. Okay, so let's start here. Balances, right? So the balance here will be 93.60, and the credit balance here will be 470. Right. Sales for the month 7890. Sales returns. Right. So I'll give you a few minutes again because I know we just started at 4:45. So hopefully by the 6 minute mark, you got somewhere around there. All right. Let's see if we can finish this off great. Right. Receipt from customers. That goes on this side here as well. Right. So that's 69,110. Discounts allowed. Clearly. Bad debts. Return check. So if when you got the check, it was on this side, if it was returned, you had to go to the next side. Closing balance, right? So the set off same 375. Right. Okay. So let's maximize here now. Okay. So we're gonna add up both sides. Right. So we're in about almost 25, 24.9, something going. Wow. Math is actually Monday and Wednesday, half 6 and half 8. So math is about half an hour away. Right. So what we do, we gotta find the difference between this side and that side. Okay, cool. All right. So, folks, that's the debtors control for JT Enterprises, right? So, of course, if you have any questions, always a good time to ask. Right? Google Meet and redrill. Give me a quick G in the chat if you're good with that. If you need me to re-explain, let me know. Me and R. One, two, three, four. Four people going out of 7. All right. And in class, people, are we okay with the solution there? Any questions? Anybody? Anything? Okay. Right. So we'll stop there for today. Now, like I said, the question that you really should try to kind of test yourself to see if you know everything is the last question in the yeah. Yeah. Mm-hmm. Yeah. Right. So for the check to be returned, so first of all, that return check is like when we did bank recs and you had NSF checks on it, right? The check bounce. When we initially got the check, that was that's part of the receipts, right? So that would have caused so this credit entry here would have caused the debit balance to go down because they're paying off. So if the check bounce, we didn't actually get the money. So you have to kind of undo the credit. And to undo a credit, you have to go on the debit side, right? Yeah, no problem. Hey guys, so this 2018 question had a lot. I think I don't think it had set off the way you could check, but yeah, this is a good one to try, right? And you have to find closing balances as well, right? And it was a full 20 marks, right? So of course, if you want to do that, feel free to do so and send me a pic, all right? Okay, so on Wednesday, I'm thinking we could start talking about either bank recs or partnerships. What are you all feeling? Bank recs? All right, cool. So we'll start some bank recs on Wednesday and then continue from there. All right, guys. So as per usual, if you have any questions didn't get to actually in class, please feel free to WhatsApp me. Other than that, have a good evening. I'll see some in about half an hour for maths. The rest of you all, have a good evening. I'll see you on Wednesday. Bye. Okay, Teresa, I'll see you.